EY released its second quarter asset management index today. It shows that confidence in the asset management industry fell once more. Chris Sickle, asset management lead director at EY, is in the Cape Town office and certainly in our Cape Town studio to help us work through these numbers. Chris, around the world, asset management fees have been under a lot of pressure. They've been squeezed in the same way that IFA fees and many other fees in the financial services sector have come into the spotlight since 2008. Do you think that with asset managers in this country bracing themselves for an attack on their fee structure, that this is perhaps behind, or at least partly behind, the drop in confidence?
Thanks, Alec. No, I don't think it's driven so much by the fees. We do a survey based on the fundamentals around inflows. So the index has dropped from 77 to 66 index points. And I think this is the first quarter in a while where when you compare to the JSE index has gone the other way. The other big driver is the sluggish inflows that has come into asset managers. That's one of the fundamentals we measure, as well as overall what their confidence or their appetite for trading conditions are currently, which if you look at what the index is telling us, it's 6 out of 10 managers are not comfortable with the trading conditions as it is.
So the index that you're talking about is not talking to their profitability or future profitability. It's talking specifically to what?
Yeah, it does include the profitability as well in terms of from a growth perspective. That has slowed. So there is pressure obviously on, given that they're not receiving a lot of funds in the past 2 quarters, that when you take the average fees per client and you multiply by the assets under management, that obviously has an impact on profit. So, but if I think to your original question around whether they're being squeezed, I think it's fair to say that the market is looking at the fees being charged to asset managers. I think what happens offshore tends to come back into South Africa as well, and we probably will see pressure.
Just take us through what has happened offshore.
So offshore, I think what the managers, depending on what type of asset you're managing, there's been a lot of fee pressure there. I think the regulators as well has looked at fees, you know, to understand, given the advice you're giving, is the fee comparable, etc.
And similarly in South Africa, that's now the regulators here are having a look at it. And I guess what you have to do is see the listed asset manager, Coronation Fund Managers, which is 20 Rand a share 3 years ago. It's now 100 Rand a share. So the share price has gone up 5-fold in the last 3 years. At some point in time, you've got to believe that that cannot continue, or at least will start retracing.
Correct. I think that is the big question. I think nobody will ever know. I mean, but the company over the past, I can't comment, how can I say, fundamentally on the company. I haven't done a fundamental analysis. I mean, from a view is that the company has done well, has gathered lots of assets over the past few years, which obviously, if you look at the share price, it has done well.
But if you're generating operating income of 1.2 billion Rand, and there are about 200 people who work there, you've got to ask yourself if those fees are sustainable into the longer term, and clearly what's happening internationally is not the case. But getting back to your index itself, how does it compare with past years?
The past years, the index has been probably at its lowest in the past 2 years. I think at 66, obviously the top end is 100, so it has come down quite a bit. And I think the other thing is, really, if you're looking at the valuations of companies now, the JSE is at an all-time high. The local economy, you have an ever-widening gap between inflation and GDP. And I think investors are really looking at this at the market now and saying, do we take the profit? Do we hold on to cash? You know, I think for the past 3 years, everybody has been speaking about a correction. Is a correction imminent? But nobody knows. You know, it could track for the next couple of years on the way it's doing now.
So the loss or the decline in confidence amongst asset managers is on the view that perhaps our stock market is a little overpriced.
Correct.
And if it isn't, if it continues to follow, as someone like David Shapiro would argue, continues to follow the international markets, which seem to only now be getting steam, would you imagine that your confidence index would change?
It would be a split. I think, Alec, it's, obviously we can invest 25% offshore. I think for the local economy, what you find, or the local investors, that's doing well. And if you look at the Rand edge counters, they've probably held up the JSE index for quite a bit. But I think locally, the local domestic companies will feel pressure going forward.
No, there's no doubt, but the calculations or the research David Shapiro has done, he told us on this program, it's over 60% of the profits generated by the top 40 come from outside the country. So as a consequence, you know, his view is, well, keep going gangbusters market.
Yeah, and then I think for fund managers, again, like I said, you've got a 25-75% split. It's also you want to make alpha, you want to outperform the local market as well, and I think that's where it lies as well to some extent, is to what extent can we outperform. So the index carries on the way it's doing. It's very difficult to almost outperform the market and to get to sort of from a fee and a performance fee perspective.
Chris, I have no doubt that there's some IFAs watching this, and they would be thinking, if the asset management grouping are feeling less confident or at the lowest level of confidence in some time, should I be worrying about my business as well?
I think this is probably a good time for the IFAs to consult with their clients. You know, IFAs will have to sit with their managers on products they're selling, as well as advising the client what's best to go forward. And again, similar to what David said, you know, 3 years we were sitting saying there's a corrections imminent, but he's saying the other view is that it's likely to continue. But it's again that crystal ball effect, no one knows.
It is so difficult. I think the financial markets today are probably as difficult as they were in 2007. Does your index go back that far?
Yeah, index does track back to 2007 as well, and I think the low point in 07 or 08 was just slightly under 50, so probably about 45. That was the lowest.